Hi, this is Dr.S.Valluvan, Academic Coordinator, MBA, Dr. SNSinstitutions College of Arts and Science. In this video, we will be looking about the fundamental analysis. Fundamental analysis. In accounting and finance, fundamental analysis is a method of assessing the intrinsic value of a security by analyzing various macroeconomic and microeconomic factors. Now, what do you mean by intrinsic value? It's a true value of an asset. In case of security, it's a fair value or true value of a stock. Maybe for example, if the company's stock may trade at overvalue or undervalue. For an investor point of view, he has to find out the true and fair value of the company stock. The ultimate goal of fundamental analysis is to quantify the intrinsic value of a security. The security's intrinsic value can then be compared to its current market price to help with investment decisions. Fundamental analysis and technical analysis. Now let's understand the basic difference between the fundamental analysis and the technical analysis. Unlike the technical analysis that concentrate on forecasting a security's price movements, fundamental analysis aims to determine the correct price, that is true value of a security. By knowing the right price, an investor can make an informed decision. A security can be overvalued or undervalued or fairly valued, as we already seen. This slide depicts the components of fundamental analysis. Fundamental analysis consists of three main parts: economic analysis, industry analysis, company analysis. We'll see one by one. Before that, we will understand the top-down versus bottom-up fundamental analysis. The slides depicts the top-down approach in fundamental analysis. An investor must analyze the economy first, economy as a whole, then sector-wise, then he has to analyze the industry-wise, then finally the company-wise. This is what we call the top-down approach. From the top, the investor has to go to the bottom to analyze the company stock, to take investment decision. In a top-down approach, it starts the analysis with the consideration of the health of overall economy by analyzing the various macroeconomical factors such as interest rate, inflations, and the GDP levels. An investor try to determine the overall directions of the economy and identify the industries and sectors of the economy offering the best investment opportunities. Afterward, the investor assesses specific prospects and potential opportunities within the identified industries and the sector. Finally, they analyze and select individual stocks within the most promising industries. Next, come to a bottom-up approach. Instead of starting the analysis from the larger scale, the bottom-up approach immediately dives into the analysis of individual stocks or the individual companies. The rationale of investors who follow the bottom-up approach is that individual stocks may perform much better than the overall industry. The bottom-up approach is primarily considered on various microeconomic factors such as a company's earnings, financial metrics, and all. Analysts who use such an approach develop a thorough assessment of each company to gain a better understanding of its operations. Thank you. This slides depicts the assessment of this fundamental analysis. First, list out the components of fundamental analysis, and then mention the purpose of fundamental analysis. why the fundamental analysis takes place, or as an investor, why he has to do a fundamental analysis. This is very important concept for which he has to answer. Thank you.